Hey, Steve Saretsky here. As always, this Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below and we'll banter back and forth. I want to do a video this week on the latest numbers from Vancouver real estate market, as well as a quick dabble on the Toronto market. Some of the August data coming out, looking at some of the Canadian economic data that's also been released, which again always funnels from the top down, and these are all things that are correlated, not in isolation. So we'll sort of get into that today. Quick little tidbit: I get a lot of people sometimes ask me, what books I'm reading. As a frequent reader myself, currently right now it's Michael Lewis's Boomerang. Really good book. Just about finished this one, but basically it talks about sort of these outlying economies which caught up in the financial crisis. They talk about Iceland's crazy banking system where every fisherman decided to become an investment banker, Ireland's housing bubble, Greece's debt bubble. Really, really good read. I'd highly recommend it. Quite entertaining actually too for finance. Now getting into the Vancouver real estate market, the trend in August is essentially the exact same that has been playing out really of the entire 2018. It just really kind of continues to be a weaker market. There is really no signs of picking up. I would argue that conditions are actually deteriorating, and this is slowly starting to work its way through into the real estate board's data sets, as well as into the media headlines, etc. Looking at the detached market, again for August this year, it was a 27-year low in Vancouver detached home sales. That was the same thing in July, it was the same thing in June, it's the same thing in May. So there's been no signs of any pickup there. So detached sales, again, 27-year lows. Again, it's not adjusted for population growth or anything like that. Inventory has been building up, but not really. I mean, from a year-over-year perspective, it's only up about 1%, because you have a lot of people putting their house on the market. It's not selling; they're taking it off, and still very optimistic. That they're going to get the price further down the road. They'll just relist it and the market will pick up in the next 3 or 4 months, surely. But that just hasn't been the case, and I don't see it being the case, particularly as credit conditions continue to get tighter, and it really deteriorates real estate liquidity. So that's sort of what's happening in the detached space. I mean, again, I just for myself taking clients through properties. I mean, really what's happening on the west side of Vancouver particularly is prices are basically selling back at 2015 prices. They're pretty much selling in line with assessed values, maybe even slightly below it. There's been some substantial losses for people that bought 2016, 2017 trying to flip a house. But I mean, there's just very few homes out there that are priced well where buyers are willing to pull the trigger. So buyers are basically saying, I'm not going to pay this price. You can lower your price and then I'll pull the trigger where I see value. And sellers are very reluctant to drop those prices. And that's really why we have very, very low sales volumes. Buyers aren't willing to pay the price, and sellers are very reluctant, sticky, and maybe overly optimistic that things are going to turn around quickly. That just simply hasn't been the case. And this, again, is starting to trickle into the condo market. I talked about this before. I mentioned that condo prices were beginning to decline. I said in Vancouver they're down 5%. In some cases, I've seen them selling 7-8% below what they probably would have sold for in November or December of 2017. Of course, I got some flack for that. People saying, oh, no, condo prices aren't down. I'm still seeing this. I'm still seeing that. And it's something when the real estate board, who is usually very optimistic, would prefer that prices only went one direction, which was up. They noted in their media press release that the MLS benchmark price for Vancouver condos has declined for 3 consecutive months. And again, the MLS benchmark is a very lagging indicator to begin with. So the fact that the real estate board is coming out and telling you, hey, condo prices are declining based on this metric that we use, again, I've been basically telling you this has been happening for 3 or 4 months now. It's only now that it's starting to get published in the media. So by the time that they get caught up to my 5 to 8% declines, that will probably be another 3 or 4 months down the road. But again, take it or leave it. I'm not here to tell anyone what's right or wrong, and neither am I going to try to convince anybody what's happening in the market. It's simply up to you to use your best judgment. But I mean, you have condo sales down at 6-year lows. At some point, it was going to follow the detached housing market. Inventory is up 52% year over year. But again, in contextualize that, inventory is still historically very low, but it's in climbing. It's jumped 50%. Sales are down. They're down to 6-year lows. This is a trend that you don't want to fight, particularly as credit continues to tighten. But again, this is really just about understanding various metrics, understanding the real estate cycles. It's the same thing in Toronto, right? They're trying to pump up that the market's recovering. But again, if we look at it in historical context, sales are still down something like 40% from 2016 levels. It's just because you're comparing to an arguably disastrous 2017 that, of course, the numbers look good. It's the same thing understanding charts and data. If we look at the Vancouver detached market as a hypothetical, the MLS benchmark, which is a lagging indicator, in my opinion, shows a 6.5% decline in values. Again, most people would tell you that they're down at least 15-20%. I'm seeing a lot of homes on the west side selling back for 2015 prices. If you actually looked at the average sales price in the Vancouver detached market, it's actually up year over year by 1%. And the median is actually up 16% year over year. The median sales price of a Vancouver detached home is up 16% year over year. But again, you have to understand you have to be able to look at a chart and take various factors to understand what's actually happening with prices. And so, I mean, one of the charts that I like to use, which in my opinion sort of weeds out the noise and is probably the most accurate, we can look at the Vancouver detached 3-month rolling average sales price. So it's basically the average sales price over the last 3 months continuously rolled over. That's clearly showing that prices declined. You kind of had this little bull trap, and then they're heading back down. So I mean, peak to trough right now, it's showing an 18% decline, which would be roughly in line with what we're seeing at least on the west side of Vancouver. So that's kind of where we're at today in terms of the markets. This really all ties into the Canadian economy and the drag effect of housing. Housing, the credit cycle is the economy. It's not so much a business cycle anymore. It's a credit cycle. You have, with housing slowing down, simultaneously you now have, with housing slowing down and credit contracting, you simultaneously have auto sales on a 6-month decline. They've declined for 6 consecutive months, auto sales, which were once at record highs along with the housing cycle. You have 54,000 some odd jobs lost this month. That was just released for, I believe it was August or July, for the jobs report. And of course, it shocked everybody. It somehow shocked everybody that we lost all these jobs. You have a flattening or inverted, close to inverting yield curve, which is generally a signal of a recession. And you have credit contraction. You have mortgage credit growth at an 18-year low. And again, somehow people are surprised. But these are all correlated. The Canadian economy is built on debt. That is what drives consumption. All you have to do is look at it and say, well, I mean, the brick will now, you can now finance your sofa, and you can finance. I've seen they're financing blenders. You can't even go to a store anymore and buy a blender for $200 cash. They'll let you finance it. So it's obviously, as soon as you start contracting credit, one's ability to actually borrow money, is it any coincidence that it then becomes a drag on consumption, as you see in auto sales, and as I'm sure you'll see in the data moving forward here on consumer durables. So unfortunately, that's where we're at. You know, you have credit cycles, they boom and they bust, and we are clearly in the rearview window now with peak home sales, peak auto sales, you know, peak job growth, I would argue. You have the Bank of Canada, which is insistent on hiking. I would argue that they're hiking into weak economic data, but again, they sort of work in the past. They're looking at really, I would say, dated, older data. You know, they just came out earlier last week just saying how they needed to continue to get rates higher. There's arguably a rate hike already baked in for October, so they're going to come in with another rate hike on top of slowing sales, slower auto sales, etc. But you know, we've seen this story before. We've seen how it plays out. So, but again, that's you know, not to suggest that anything is imminent tomorrow. You know, but you just sort of take what you know, try to set yourself up, position yourself, etc., for potential opportunities. Yeah, that's all we have this week. If you have any questions on the Vancouver real estate market for particular areas, let me know. I'm happy to send you data, etc. This is really all about transparency and in the process of helping people. So if you feel a certain data set might help your judgment on what you want to do, happy to send that over. Otherwise, see you next week.